Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review of the Emini 5-minute chart for Monday, February 2nd, 2026. I'm going to keep it brief today, so we'll stay on the 5-minute chart and we'll just back up to, let's see the context going into the day. Bear channel, this is the bear trend line. The bulls broke the bear trend line. Also in this area, the bulls broke above the moving average, the lower high, and the bear trend line. So several areas of resistance that now have become support because the bulls broke strongly above them. So strong bull breakout with follow through, creating a lot of distance and time between this, what should have been resistance, and the actual market price. So what happens? Well, we get a minor reversal, but it's a tight enough bear channel that it's a breakout on a higher time frame, and it's probably going to get a second leg down. Basically, the bulls are looking for this to be a major trend reversal. Bear channel, bear trend, bull breakout, trend line break. You're looking for a test of the lows, which we got the minimum, we got the test of the breakout point here, but this is tight enough for a second leg down. So it's probably a trading range at this point with sellers above, maybe somewhere up here, somewhere in this area near the high. So bulls getting a second leg, but possible second leg trap high in a trading range, met with sellers, and then a gap down going into the day. So what the bulls have, let's look at it from both perspectives. The bears, bear channel, trend line break, strong enough pullback for a second leg. Well, the bears have their second leg, so there's a completed price structure. Bear breakout. On a higher time frame, it's more clear. On this time frame, it's a channel. There's pullbacks along the way. But bear breakout, deep pullback, second leg down. So now this is, you imagine the gap down as just basically a trend bar. Just like bar 76 may have been a second leg trap for the bulls, the gap down might be a second leg trap for the bears, because now the market is at support in leg 2 against a pretty strong bull breakout, and it's possible that it's a major trend reversal. Bear trend line break, retest, and it's basically a big high 2, high 1, double bottom, high 2. So on the open today, strong bull breakout bar with follow through bars. And you have to ask yourself, are the bears making money during this rally? And the answer is no. It's really hard to make money as a bear in the first 5 bars of the day. And that's telling you that traders are trapped, and it's a strong enough breakout that there's probably going to be a reaction, a second leg in the direction of the breakout. What this tends to do is lead to a brief and shallow pullback. So after this much buying, this many consecutive bull bars, we've already had the correction. So bull breakout, 2-legged pullback, and then a possible reset of the leg count here. The bears who sold here used this pullback to exit at break even. So the bears were desperate to get out here, and they were buying right on the open. Both bulls and bears were buying, and that's why it's all buying pressure on the open today. So a strong rally, expectation, minor reversal, a shallow pullback, and then a second leg. And that's what we got here. Bull breakout, shallow pullback, and then a second leg. Now this entire rally, we see 2 legs because there's a pullback on bar 6, leg 1, pullback, leg 2, but on a higher time frame, we would not see the pullback, and this would simply be a one single price leg, a simple leg with no pullback, and this entire rally may get a measured move up as well. Reversal follow through 11-12, strong enough for a second leg down because the bulls who bought bar 10 are disappointed. If you bought the close, bar 10, think about it. If you're buying closes as a bull, you're making money. Buy the close, make money. Buy the close, scale in, make money. Buying the close is working. And then you get a reversal and follow through against your position. And that's going to create disappointment. It's going to generate disappointment from the bulls. So the bulls who bought the close bar 10 see bars 11 and 12 reversal and follow through against them. They may use any rally to exit that position on the close of 10 at break even. So I suspect there are sellers above bar 12 after seeing 11 and 12, reversal and follow through, pullback likely, and second leg down likely. But big picture, it's still a minor reversal. So the bears might be selling and making scalps, but after this much buying, I would not expect a major trend reversal into a bear trend. But again, reversal follow through 11-12, strong enough for a second leg down. So basically a high one buy 13-14, but remember, disappointed bulls bar 10, so not ideal for buying bar 14. The market has entered the channel phase. So breakout through here, then we pulled back on 6. This may have been the start of the channel phase, but then a new breakout and then a new pullback. So a start of a channel phase here. In the channel phase, bulls buy pullbacks and take profits at new highs. So that creates resistance here, which is why buying 14 is not ideal. You have bulls taking profits in this area and bulls who bought before disappointed by the minor reversal looking to take profits and sell as well. 15-16 breakout follow through. Now the bears have their second leg sideways, but that's 15 and 16, strong enough bear breakout and follow through for its own second leg down. But still probably a minor reversal. And then it looks like the bears got a symmetrical second leg. 15-16 breakout follow through, pull back, and they reached their leg 1 equals leg 2 target. 3 legs down, although it doesn't look like a traditional wedge. By the way, the blue line is yesterday's high. And when I say yesterday, I'm referring to the prior trading day, so that would be Friday's high. And this area is support. The market broke above the prior day's high, and when it tested it again, found support, tested it, bounced, trying to break below it, finding support. And then I said it's 3 legs down. 1, 2, pull back, 3. So it's basically a double bottom, 13 and 17, and then a breakout below the double bottom, which should function as a wedge. So it's basically 3 legs down. Strong reversal bar on 20, second leg up likely, and you have the additional argument that this tight bull channel has set the tone for the day. It's always in long. It might be a bull trend day. This might be a wedge bull flag. Not to mention this breakout point here, bar 5 high. Remember, like I said up here, this may have been the start of the channel phase. Bull breakout, pull back, start of the channel. You expect sellers at a new high, but instead we found buyers. So what happens when the market comes back to that price? The traders who sold here got trapped and they use it as support to buy later. So 3 legs down, strong reversal bar 20, second leg up likely, and this tight channel is likely to have a second leg up as well. So a lot more going for the bulls here than the bears. The bears have a late leg, and it's more likely a minor reversal. Reversal follow through. Bulls continue to get follow through, but then a pullback below 23 on 24. 24, it's a high 1 at the top of a trading range or the top of a channel. On a smaller time frame, bars 20 through 24 is a bull spike and channel trend, but you look to the left and you see that the market is at the top of a trading range. So not ideal for buying up here, although this micro channel is likely to get a second leg. So it's okay if you do buy and scale in lower, but buying here just is not ideal because a pullback is likely. Breakout, pullback, second leg here, tight bear channel. This is probably going to get a reaction, a second leg down. So we test resistance, top of the range. Bears looking for at least a test of probably the bar 19 high, the bad stop order signal bar. You've also got the reversal and follow through, 50% pullback. And what happens here, we get maybe three or four legs down. One, 2, 3 legs down in a parabolic wedge, testing support. Again, that 20 and 21 reversal and follow through. There's your 50% pullback. And the structure is good for the bulls. 3 legs down, bears are breaking below a channel line. So expectation is buyers here, and a second leg up for this rally, and a second leg up for this rally, or at least the most recent one here, maybe 6 or 7 through maybe bar 9. The reason I'm not including bar 10 is because there's increased overlap with bar 10, and bar 10 is a noticeably smaller bar than bar 9 and 8. So both getting their second leg. Breakout, pullback, second leg, leg 1 equals leg 2, measured move. So a good looking rally, but at a measured move target and possibly a late leg. At a new high, bulls failing to get follow through. Still a minor reversal. 33 is nothing to panic about. If you're buying, this is still likely to be a minor reversal. In fact, it's a strong enough breakout. First reversal is likely to fail, and that means bulls are probably going to buy the first pullback, at least for a scalp, just like they did back here and back here. Micro channel, buy the first pullback, and maybe exit at the new high. Micro channel, buy the first pullback, exit at the new high. So same thing could happen here. Micro channel, they buy the first pullback, maybe they look to exit at the new high. Market's in the channel phase, so bulls are buying below bars, taking profits at new highs. What about 38? Is that a good low 2? It was probably a minor reversal, and there's not enough selling pressure through here to really argue selling below a trading range bar on 38, so probably buyers below, and maybe one more test of the highs. But now at this point, 3 legs up, 1, 2, 3. And now you're getting a big bull bar, but we are 40 bars into a bull trend, and it might be leg 3 of a channel, so dangerous to buy bar 41. 42, reversal bar, strong enough bar, kind of similar to 11 and 12, where it's a strong enough bar for a second leg down, but it's still likely a minor reversal. So I'm not expecting a bear trend to be produced from bar 42, but I am expecting a correction. We've had a wedge, 3 pushes up, so it's possible we get a 2-legged correction. Possible targets include this breakout point, bar 28, bad buy signal bar, start of the channel or the low of the channel. 43, basically a high 1 in leg 4. 1, 2, 3, 4. So 43, probably sellers above, sell to close. Bears getting their second leg down. Micro channel, strong enough for a second leg. Became parabolic on 47, testing this breakout point. But this is strong enough selling. This entire sell-off, 42 to 47, was a micro channel, so minor reversal and second leg down likely. So at this point, the bears have done enough damage. It's probably a trading range and no longer a strong bull trend. So sellers above likely, probably sellers around the high I'll use the high stop order, so the buy above 41. Traders who bought here got trapped. Maybe if they're quick, avoid a loss on 43, but this might be an area of interest for sellers. The bears don't want to sell here now because we have this bull breakout. Bulls maintained enough control to produce a channel, which on higher time frame is a bigger bull breakout, but there's a breakout point here, support, so the bears less interested in selling here, but they might sell a pullback and capture a second leg after this sell-off. Hard to buy 47 after this many consecutive bear bars, but 48 is a bad low one, bottom of a trading range, probably buyers below. And finally, the bulls got the breakout 51, but upside limited. Like I said, this area may act as resistance at this point. 52, breakout follow through, but a much smaller follow through bar, and we're still not out of the trading range to the left, so we're testing probably resistance. Hesitation, high one on 54, found sellers. Technical high one, 55, but probably sellers above. The upside is very likely limited. So finding a fair price here, going sideways with a lot of small trading range bars. Bear breakout 61, strong enough for a second leg down. I still think this breakout needs a second leg. This all could be a pullback before maybe another test of this low. And then a strong follow through bar. So bear breakout 61, follow through 62, 3-bar micro channel, second leg down likely, sell the close, sell the pullback, sell above bar 62. 63 bull bar, but testing breakout points, context good for second leg down. So 63 probably a sell the close bar. And you can see testing that tight trading range. When the market breaks out of a tight trading range, let's think about what a tight trading range is. It's an area of agreement. Turn off snap mode. Traders were in agreement here. This is a tight trading range. On a smaller time frame, there's a lot of overlapping bars through here, and price is going sideways. And then suddenly, price was way down here. It pulled back, but tested the low of the range and then got follow through selling. So the price was going sideways through here, and then suddenly was down here, far below this trading range. The traders who were buying through here got trapped into losing positions. The traders who did not sell missed out on a winning position. So both groups of trapped traders are looking to sell a pullback. The bulls who bought through here, they're losing money. They're hoping for a pullback to avoid a loss or exit with a smaller loss. Or maybe bought at the low of the range, scaled in, they may even make a profit. The bears who did not sell are looking to make a profit and capture a second leg after this breakout signal. So breakout follow through, pullback, bulls and bears both sell here. The tight trading range is tested. It's a magnet. It's a magnet because everyone agreed this was a fair price, and then suddenly price broke out and fell far below it. Price gets sucked back to the magnet, but it becomes resistance because of this breakout, and then this breakout gets a second leg down. 66, kind of a surprising bear bar. 3 legs down to support. So it might be 3 legs down. 1, 2, 3. Testing support. Here's a breakout point. Bar 28 or 29, somewhere in this area. Market's testing support. Last time the price was here. Remember, the traders who sold back here lost money. So if the bears sold here, scaled in higher, now the market's finally giving them a chance to exit at break even. Not to mention this big breakout on the open. This entire rally still might need a second leg up. It looks like this one, let's say we use 6 through 9. This one reached a symmetrical second leg. I explained earlier why I'm not including bar 10. It's because the momentum To me, it looks like the momentum is from bar 6 or 7 to bar 9. And then this was the start of the channel phase on 10, a much smaller bar. So a 3-bar rally, pullback, reaction at the leg 2, measured move. So 66, a big bear bar, but testing a bear channel line and support, a breakout point of a strong bull breakout. So 66, not ideal for selling. It's a late leg at support, probably limited downside. Might be better to look to buy. It's a big bar, so giving you actually a bad trader's equation for selling, because big bar means big risk, late leg means increased chance of reversal, and it's at support. So do you really want to be selling a late leg at support and take on big risk? So 66 might be a buy the close bar instead of a sell. There's your reaction, reversal, and follow through, but 66 is still strong enough for a second leg down, but it's kind of big down, big up, big confusion. Bears need a second leg down, bulls need a second leg up. Market going sideways here. Now it looks like the bulls are failing. Bars are staying below the moving average. Reversal, follow through. Bulls got just over a 0.5 R second leg, but now it looks like they're failing to control price. It's possible it's a reversal and follow through, high 1, high 2, but this is strong enough for a second leg down. So dangerous to be buying here. The bulls had their chance to reverse, and it looks like they might be failing. 4 consecutive bear bars. First reversal probably minor. Looks like about a 50% pullback of this sell-off. So sellers in that area for a second leg down, which they get quickly with a quick scalp, but still nothing to buy, so okay to sell. Sell above 77. But definitely a trading range at the end of the day here. So lots of overlapping bars. You can make money buying or selling, but the range is fairly tight, and it's also late in the day, so not ideal. Not really worth trading past bar 75 this late in the day. For always in today, always in long on bar 1, and it never flipped to always in short. This is always in long, still always in long. Minor reversal, so you can expect a second leg sideways to down, but if you're an always in trader and you're holding through minor reversals, you're expecting a minor reversal, a pullback, and then continuation to the upside. So still always in long. Bears never did enough here to convince traders that it was always in short. Still always in long. Bulls might be thinking about taking profits as we enter the channel phase. We're getting 30 bars into a trend, maybe even more, depending on where you start counting this as a trend. But nothing, still always in long. No bear breakout to flip the always in direction. 42, it's more minor at this point, but since it's a channel in a late phase of a channel, it's probably a trading range at this point. So 42 is a bar that I would not hold longs below. So for that reason, I would say it is always in short below bar 42. But then probably always in long above 47, although not ideal because of the micro channel. Better to wait for a second entry. Probably always in long 51, but trading range, so scalp, and it's a tight range, fairly tight range, so not ideal for always in. Always in is for swing trading and trends, but at this point we're in a trading range. So I said always in long 51, but it might be always in short now that we're testing resistance high in a trading range. So breakout follow through, but might be always in short below that bear bar. Breakout follow through, we talked about this one, probably sell the close, always in short 62. But 66 might be always in long. We talked about that. 3 legs down to support by the close 66. Reversal follow through, but testing resistance. Breakout point here. Breakout point here. So it might be always in short again. It's buy low, sell high, basically. So buy low, sell high, buy low, sell high. Maybe always in short for our micro channel, but testing support, hard to stay short here because the breakout point, the reaction is probably always in long, although this needs a second leg down, which it quickly got. So trendline break, retest, now it's always in long. Alright, that's it for today's video. Thanks again for watching. And if you want to go deeper into price action trading, you can find many resources in the description of my videos. If you or a friend have not yet studied the Brooks trading course, you can find my affiliate link to the course in the description, which helps support this channel. If you are a serious trader who is interested in the trades that I take and what I've learned from Systems Academy and other more personal subjects on what it takes to be a professional trader, you can join the channel membership for ad-free videos on those topics. For Ali's website and his breakouts white paper, you can find links in the description for those as well. I am not affiliated with him and do not get paid to promote his resources, but I am adding them because Ali has been instrumental in my journey of success in trading. And that leads me to the last resource, which is Bob Proctor's You Were Born Rich Self-Help Seminar. I stumbled upon it while looking around Ali's YouTube channel, and the lessons it teaches have also been instrumental in the success I experience, not only in trading, but in life in general. Everything offered and mentioned here is what I wish I had when I was beginning my trading journey. So I hope it's helpful, and thanks again for sticking around to the end of the video. I really hope it helps you get closer to reaching your goals, and I hope everyone has a good night.